Salam Jastra. I'm Dr. Ridwan. Now we at chapter 8, budgeting part 2. The master budget planning tools. So the master budget is like a detailed roadmap for a business, showing how it plans to achieve its goals over a specific period. So, what is the master budget? So, actually, it's a big pictures plan. It outlines the organization's overall strategy and include details plan for sales, productions, the purchasing materials and other related expenses. So, is a comprehensive document. It's bring together several smaller budget into one complete plans. And then, the component of the master budget include, comprise of a cash budget. So the cash budget, actually, this part estimate how much cash will come in and go out. It help ensure the business have enough money to cover its expenses. And then budgeted income statement. So budgeted income statement, actually this forecast the business profit and losses, showing expected revenue or income and expenses. And then and a budgeted balance sheet. So the budgeted balance sheet, so actually is a predict what the business financial situation will look like at the end of the budget period, including asset, what's the business own, and liability, what the businesses owe. So how the master budget works? Actually, in the detail, actually it's a detailed future plan. So the master budget breakdown future business plan into specific measurable parts. For example, it is specific how many products to make, how much money to spend on material, and how much revenue to expect from sales. And then it also interconnected budget, which means it consists of many smaller budget that are connected and depend on each other. So each smaller budget is prepared in a specific order, meaning you need to finish one before moving on to the next. So, as example, you have to, let's say, imagine you are planning a big punya event, university punya event. So, the first thing that you need to, come up with your big picture plan. You need to outline everything needed for the event, such as ticket sales, for instance, decoration, food, and activity. So the component that you have to include on the budget, like cash budget, you need to estimate how much will come from the ticket sales, for instance, and donation, and how much you will spend on food, decoration, and other supplies. And then, in terms of preparing your budgeted income statement, you need to predict your total income from ticket and compare it to your total expenses from the revenue. And then you need to compare it to your total expenses to see if you will make a profit or loss. And then, in terms of your punya budgeted balance sheet, your forecast, what your finances will look like after the event, including any money left over or debts to be paid. So how it would? So you need to understand that you need to have a detailed future plan. You specify how many tickets you need to sell, how much food to buy, and how many decoration to get. So you have to interconnect your budget. You need to know how many people will attend. For instance, like how much ticket sales before you can decide how much food to prepare, like your food budget. So each part of the plan depend on the other part and must be done in order. So the master budget is a comprehensive and details plan that brings together all the smaller but one comprehensive strategy. So it helps businesses plan their finances, so ensuring all part of the plan work together smoothly to achieve their specific goals. The master budget actually summarizes all the functional budgets into the budgeted statement of profit and loss, cash budget, and budgeted statement of financial positions. So actually, the budgeted statement of profit and loss also actually shows the expected revenue and expenses, giving a forecast of a business profitability. In terms of the cash budget, it gives you details, the expected cash inflow, money come in, and outflows, money going out. So it helping ensures the business have enough cash to operate. And then the budgeted statement of financial position, also known as the budgeted balance sheet. So this shows the expected financial position of the business, including assets, liabilities, and equity at the end of the budget period. So, and then functional budget related to one another. Actually, there are six types. The first one actually is the sales budget. So, sales budget, like a revenue forecast, actually is estimate how much the business expect to sell in terms of unit and revenue. So, which means that this budget is a crucial because it influences all other budgets. And then the second one is the production budget. So the production budget actually is your production plan. So based on the sales budget, it outlines how many units needs to be produced to meet the sales demand. And then your resources need. So it also determine the resources required for production, such as raw materials and labels. And then the third one, more specific, the raw material budget. So actually, you need to know how much material required. So you need to estimate the amount and cost of raw material needed for the production. You need to you have in terms of supply planning, and you need to ensure that enough material are available to meet the production schedule. And then the fourth one is the direct labor budget. So the direct labor actually is the labor cost. Your punya estimates the labor hours and cost required for production. And then it also for you to do a staff planning. It helps in planning the workforce needed to meet the production's goals. And then manufacturing overhead budget. So overhead costs actually estimate all the indirect costs associated with the production, such as utilities, maintenance, and factory supplies. And then in order for you to control your cost, it helps in managing and controlling, overhead expenses. And last but not least, that we look into the cost of sales budget, which means your total production cost. Actually, is all summarize all the costs involved in the producing the good that will be sold. So it's easy for you to make a profit calculation. It help in determining the cost of the goods sold, which is crucial for calculating the profit. If you see these figures, 13.1, and then you can find out this is the interrelationship between functions and functional and master budget. As what you can see, the breakdown for the functional for operating budget include the sales budget, the productions budget, which is comprised of direct material budget, direct labor budget, manufacturing overhead budget, and also you need to forecast or you need to plan for your selling and admin expenses budget as well. So in terms of in the for the master or financial budget, it will comprise all this functional budget in order for you to prepare the budgeted income statement budgeted statement of the financial position as well as your cash budget. So all the no, functional budget will facilitate the preparation of the master budget as shows in this uh, diagram, in this figures 13.1. Okay, you can see here the schedule. So here is the quick breakdown of each budget. The first one is sales budget. Actually, is predict how much the business expect to sell in a certain time period. Production budget actually is a plan how many unit needs to be made, considering existing stock level. Direct material budget, so which means you need to track the movement of raw material, including purchases and usage. And direct level budget actually estimates the levels hour needed and associated costs. And then manufacturing overhead budget, which is the list of expected expenses for manufacturing overhead costs. This table, what you can see now is the selling and distributions budget. So it is forecast expenses related to selling and distribution activity. So the budgeted statement of profit and loss actually is a predicts the business's expected profit or loss by detailing costs and revenues from the functional budgets. And then the budgeted statement of financial position shows the expected financial position in terms of assets, liability, and capitals. Last but not least, a cash budget. Track your cash inflows and outflow, showing if there are surplus or deficit at the end of each period. Okay, now we look into the limitations of budget. The first one is time consuming. So what it means is actually the creating budget can take a lot of time and effort, especially when gathering data, making calculation, and coordinating with different departments. And then second one is the continuous monitoring. Actually, once a budget is set, it's required ongoing monitoring to ensure everything stay on track. So this continuing oversight can be demanding and may divert resources from other tasks. The third one, inaccuracy. So budget are based on the predictions and estimates, which may not always match actual outcome. So factors such as market changes or unexpected expenses can lead to inaccuracy in business projections. And then lack of information. So budget really on the information available at the time of preparation. If key information is missing or incomplete, it can result in incomplete or inaccurate budgets. Last but not least, in terms of the complexity, because the budgeting processes can become complex, especially in a large organization with multiple departments and various operations. So managing and coordinating all aspects of the budgeting can be challenging and prone to error. So if you have any questions, you can ask during face-to-face class, or you can write them in the chapter forums. Bye bye for now and see you at the next chapters.